silver just went insane. It broke past $54 an ounce. That's an all-time high level. Everyone's talking about it, from Bloomberg to Peter Schiff, some even saying this could be the start of a $100 silver era. But hold up, this chart looks just like the legendary 1970s breakout. History might just be repeating itself. Post by the Dude. The silver market traded 801 million paper ounces yesterday. The COMEX had 64 deliveries and the LBMA had 70. It's False Flag Friday, and the LBMA desperately needs a reason to claim force majeure. When do shorts actually be forced to cover short positions? Now that's huge. 801 million paper ounces in one day? That's an insane amount of leveraged trading compared to the actual physical supply. What this means is there's massive paper activity without much real metal moving. When he says False Flag Friday, he's basically hinting that these sudden moves might be artificially influenced to control sentiment before the weekend. As for shorts covering, that only happens when prices start moving sharply against them, forcing them to buy back to prevent bigger losses. Until that happens, they can stretch it out with leverage, but when the market flips, that's when we see violent short squeezes and silver rockets. Now, Just Dario adds, silver slams now attempted during Asian hours when pressure is the strongest. How cute. He's pointing out how these sudden price drops often happen when liquidity is lower, like during Asian hours, meaning fewer big buyers are active. That makes it easier to push the price down temporarily. But here's the key takeaway. These kind of manipulative moves can't last forever. The physical demand and real metal shortage always win in the long run. Silver's not done yet. It's just testing the weak hands. Post by Jordan Roy. Brand new chart. Silver all-time high breakout analog. On the current scale, the 1967 and 1973 moves went to essentially $100. 1979 to 80, over $400. Wow. He's comparing today's silver chart to the massive historical rallies back in the 60s and 70s. Those were explosive decades for silver. Inflation, monetary shocks, and demand surges drove huge spikes. He's showing that if today's pattern follows that same momentum, silver could mirror those historical percentage runs. But remember, that's a chart analogy, not a guarantee. Markets are different now. More paper trading, more regulation, and faster liquidity. Still, the resemblance is catching everyone's attention. Post by Bloomberg. Gold and silver touched all-time highs as fears about credit quality in the economy and heightened U.S.-China frictions strengthened demand for havens. That's the mainstream view right there. Investors are running towards safe assets like gold and silver because they're nervous about credit markets and global tensions. When uncertainty rises, people want protection, and metals usually become that safety net. So this isn't just hype. It's real macro pressure pushing money into silver and gold. Post by Eric Young. I think they lost control of silver at the LBMA because they have zero free float physical silver. The effects are now spilling over to gold, and the gold price breaking out is making the silver price higher as a positive feedback loop. That's a bold statement. Eric's saying there's almost no freely available silver left in the London bullion market, meaning physical supply is super tight. When real metal availability drops and paper demand stays high, prices can explode. He's also describing a chain reaction. Gold breaks out, silver follows, feedback loop intensifies. This shows how intertwined both metals are in investor psychology and market flows. Post by Robert Royce. Silver's $50 peak in 1980 represents $208 after inflation adjustment today. We're not even close to the real all-time high. Mind-blowing. When you adjust the 1980 high for inflation, silver would need to pass $200 per ounce to match its real historic peak. It means that even though silver looks high in nominal terms, in real terms, it's still far from its true record. That gives long-term investors a sense of how undervalued it might still be compared to history. Post by Stoic Silver Bear. Silver closes the day above $54, convincingly over ATH rising resistance again. I'm starting to think the next rising resistance gets hit before a correction. If so, that will bring a serious correction, but it has a way to go. Could be $68 or so by DC if it moves fast. Technical traders are watching these resistance zones like hawks. Crossing $54 means silver officially broke above major ceilings. That's powerful momentum. He's predicting a move to around $68 if the speed continues, but he's also cautious about a correction afterward. That's a disciplined take. Enjoy the rally, but respect the pullback risk. Post by Make Gold Great. Silver 54 on its way to $60 or $100. That's pure excitement right there. The community energy is off the charts. When people start shouting big numbers like $60 or $100, it shows confidence, but also hype. It's fun, it's emotional, but always good to keep your head clear and remember the volatility. Post by the Great Martis. Silver. Ladies and gentlemen, silver has officially hit major resistance. RSI has entered the exosphere, last seen since the 2010 European debt crisis. Stay vigilant. Hope this helps. That's a technical warning. RSI in the exosphere means silver is extremely overbought. Momentum is crazy high. The last time it was this hot was during the 2010 debt crisis run-up, and we all know what came after, a huge correction. So yeah, staying vigilant is smart advice right now. Post by Eric Yang again. They kicked the LBMA COMEX silver price spread back above $1 to suck metal out of New York. This is deep market talk. Eric's referring to the price difference between London and New York exchanges. When that spread widens, traders might physically move metal to where it's priced higher, in this case, from New York to London. He's implying this shift drains physical supply and tightens markets even more. That's how interconnected these global systems are. Post by Peter Schiff. Gold rose over $100 today, now trading above $43.15. Silver rose over $1 and is trading above $54. Gold is up 64% and silver 87% so far this year. Many mining stocks have tripled or more. If you don't think this portends an imminent dollar and financial crisis, you're in denial. Wow! Schiff is connecting the dots. Huge gains in metals and mining stocks often signal deeper cracks in the financial system. He's warning that this could point to stress in the dollar or the broader economy. Whether you agree or not, it's a strong macro viewpoint, and it's fueling debate all across the financial world. What we're seeing here is a mix of excitement, fear, and deep analysis all swirling together in the silver market right now. From historical analogs to technical breakouts, from physical shortages to macroeconomic fears, it's all driving this incredible move. But remember, this is market commentary only, not financial advice. Stay informed, stay balanced, and always respect both sides of volatility. Silver's story is far from over, and the next few months could be legendary.